You know, inflation is getting political when we have the president calling the Fed chair into the White House. Of course, we have heard Biden stressing Fed independence here, but what do you think is going to happen next? And is this going to accelerate the Fed's trajectory here, perhaps adding more pressure to do more on rates?
Yeah, that's the big question. The biggest macro issue really is whether the Fed is going to follow through on the interest rate expectations that have kind of been priced into the marketplace, right? Because essentially it's got a follow effect on for example, the US dollar and how that's doing. Oil prices, that has a certain implication as well. I think basically when you look at the situation, it's really going to come down to the inflationary numbers. So far, based on what we've been seeing, it does look like we've probably hit the peak inflation number that's come out from the US. Probably not in Europe and some of the other parts of the world yet. But that could actually put less pressure on the Fed to continue hiking, because basically all the other economic data that we've seen coming out from the US suggests that the US economy is probably not going to be under any threat of going into a recession anytime soon. The latest consumer numbers coming out, for example, have been relatively strong. So I think we've got to look at what the jobs number is going to pan out later this week, and see whether or not the Fed is still going to stay on the same path.
I think it's fascinating when you look at those jobs numbers on Friday. Obviously, a lot riding on the data. But Daryl, when it comes to the overall political implications here, we have also seen President Biden saying in his Wall Street Journal op-ed that it is the Fed's responsibility to control inflation. So perhaps some blame shifting happening here. But remember as well, this is a Fed chair who has also been criticized for not doing enough to address inflation and address some of the supply side shocks that we've seen early at the onset of the pandemic. So what do you do if you're an equity investor in this environment? You're looking at the navigation from the Fed, you're looking at the trajectory here and trying to get a grip on what's possibly going to happen next.
Yeah, that's the big problem right now, because essentially the if you're an investor at this point in time, I think the whole question here is whether or not the Fed follows through, right, with what they said they'd be doing. But if you look at Jay Powell's kind of track record, he definitely doesn't appear to be like a Volcker kind of character, meaning to say that when the data starts to pan downwards, it does appear that he'll probably hold off, right, in terms of rate hikes. So if you're an investor at this point in time, I mean, I would look at the sentiment indicators. Sentiment indicators are extremely bearish at this point in time, which is one of the reasons why we saw a recent bounce in markets before the sell-off yesterday. I would be very, very cautious as an investor at this point in time, because of all the macro headwinds that we talked about, and because of the potential rising threat of a recession in the US. But having said that, I think there will become a turning point in terms of whether or not the Fed holds off on its rate hike expectations. And that could possibly be a buying opportunity for equity markets, especially in the tech sector, which has been hammered, right? So there could be certain trades that can be played. Value versus growth, for example, could be one which could come back into the fore again. So I think the whole issue here for equity investors is to be really nimble at this point in time.